Welcome to the first ever episode of the CPA Revolution, where we will uncover the hidden gems and show you how you can use tax strategies to build wealth. I'm here with Jose Ortiz, our tax expert and CPA, and some of you may already know me. I am Charina Padilla with Engineer Tax Services. Tell us a little bit about what you will be talking about, Jose.
Well, what we want to do is bring insights to you that you may have never heard before, because typically the CPA doesn't sit here on a channel and talk about these kind of things. But we want to provide monthly insights for tax savings and for money mindset, and just kind of give you a little fun with some tax trivia as well.
I love it. So let's get started. Our first segment is about what they don't want you to know. So, Jose, tell us a little bit about why is it so complicated and why aren't people asking the right questions?
Well, Charina, you have to understand first that the U.S. tax code system was built complex by design, right? There's a tons of technical pages and so forth. But what a lot of people don't understand is that the tax code wasn't written to necessarily take money from you. It's designed to help benefit you through incentivized programs that the government wants you to engage in.
Yeah, I see that as the complexity of the code, it's benefiting the system. Are people more willing to pay up high taxes rather than ask questions?
It's not necessarily that. It's just that they don't know what questions to ask, the number one. And then number two, we've been used to in this country abdicating that responsibility to CPAs, when in fact, that should be something that, one of the first things probably that we should be understanding when we start a business, even when in our personal lives.
I see. It's really eye-opening how all of this comes together. And the one thing that, or takeaway that we can get from this is really understanding our business and our goals, making sure that we are partnering up with trusted advisors that are going to be able to guide us through those complex tax code challenges and make sure that we are capitalizing on the opportunities that have been made available to all of us.
Right, right.
Yeah. What can you say as far as uh, toolkits or tips that you can give people so they can start learning how to be more involved and proactive in asking questions?
Right. And that's a great point. That's a great question, because the thing about it is you should be looking for a mentor. You should be looking for an advisor when it comes to taxes, right? Particularly if you have a lot to lose when it comes to taxes. A lot of people don't look for that, right? And maybe just they don't understand that the business has been commoditized, this industry. But you should be looking for someone who is willing, who has the time and availability and their structure to be able to mentor you throughout the process.
Yeah, I've been lucky to have a mentor like Julio Gonzalez, the CEO of Engineer Tax Services. He has helped me not only throughout my career, but also with my personal business. So it's so important to have that person guiding you that really understands the system.
Exactly. There's a lot of value there.
Yeah. Jose, I think it's so important to bring awareness about these tax strategies. What are some of the items that you are mostly looking into as your tax planning processes for your clients?
Right. So when it comes to tax planning, the one thing that I want people to understand is that this government, the tax code, incentivizes three things. Number one is small business, right? So basically, the government wants you to expand your business. It wants you to be successful because this country is primarily made of small businesses. Number two, it wants you to save for retirement, right? So basically, we look at all of those things, where the client is right now with their retirement, because we want to be able to take advantage of some of those tax savings that we can actually implement by putting in retirement. So it's kind of like a double win. And then number three, real estate. And that's, this is something where you're actually really partnering with the IRS to help you save money. So they are a partner when you buy real estate and you do say something like a cost segregation, you implement depreciation. Now, the thing about depreciation is that, and that makes it unique, is that it's a paper loss. It really doesn't exist in the real world. But what it does is help to reduce your tax bill, and what you want to do is reinvest that money.
Great, great, great stuff, Jose. Thank you so much for
Sure.
sharing. I love real estate myself,
Yeah.
and cost segregation is one of the powerful tools that I always talk about, along with energy incentives like 179D and
Right.
45L. It's definitely the preferred method for the IRS to take advantage of that accumulated depreciation benefit. It helps you stay compliant, and the tax benefits can be used in so many ways. I know you and I have discussed on how these benefits have helped thousands of our clients and help recapture a lot of that incentive and putting it back in their pockets. How do you see that from the CPA standpoint?
Well, yeah, I mean, that's one of my key go-tos is when I talk to clients, because one of the things that I tell them, especially if they're W-2 employees, you want to start a small business. Because why? As I mentioned to you just earlier, that opens the door to tax planning. Now, you can start a small business doing any other typical type of business, or you can start building a real estate portfolio. And that's one of the things that we want to kind of push people towards is to encourage real estate because real estate has one of the highest incentives of anything that you can do when we're looking at tax planning. So that's the way I kind of gear it. Those are the three or those areas that I want to kind of touch on so that the client understands, okay, this is the way I need to go. This is the route, the roadmap that we want to hit.
I actually love that article that you just posted about reinvesting in your growth. Like,
Yeah.
tell me a little bit of how you've been able to present that to your clients and explain it in a way that they can understand it, taking that accelerated benefit up front and then reinvesting it over a period of years. Tell me a little bit of how you explain that so our listeners can grasp the idea
Yeah.
of how this works.
Sure. Remember what I said. So basically, you want to make investments, right? You want to make investments in yourself. You want to make investments in CPA. But you also, when we're talking about tax planning, you want to take the money that you're actually saving, and you want to implement it in another way that is going to keep growing that portfolio, keep growing that passive income if that's what you guys are looking for, and eventually get to a point where you have a substantial nest egg. This is basically where we talk about kind of using that tax savings to build a larger portfolio. But what that really requires, Charina, is a strategy, right? And you have to have a strategy going in and you have to have a strategy going out when we're talking about tax planning. So basically, that's how I approach it. We have to start with that, and we just kind of use it as a building block. Say somebody, has their first property, we do a cost seg. They take that savings and they might reinvest it in a second unit, right? Or they might reinvest that in other types of tax advantage investments. But the point is that we keep that money in our pocket, learn to reinvest it, because otherwise, what's the point?
Right, right. And that money is going to be growing with compounding interest. And we should not be afraid of recapture at the end of the day, because that's one of the common questions I get. Well, if I take this up front and I decide to sell my property, what's going to happen? You know,
Yeah.
what if you don't sell it and now you just lost all those years of multiplying your hard earned money?
Right? But that's what happens when you don't go in with a strategy, right? So basically, if you come to me and you say, hey, I want to build a portfolio, then I have that understanding. I'm not going to let you just take that tax savings and just, take the family out to Disney World, right? We want to reinvest that money and avoid depreciation recapture, right? So, but that's all based on a strategy. So you tell me, hey, this is my first property. I want to build a portfolio. The idea would be to do the cost segregation, maybe do a 1031 exchange, and you'll never have the recapture. But the key piece is having that strategy, having someone to tell you this is the way you should go.
It is so important to understand what the rules of the game are,
Yeah,
right?
super.
So we really need to make sure that we are connecting with our trusted advisors and making sure that everyone is working together rather than in silos.
Exactly.
What a great breakdown, Jose. What are some of the common misconceptions? I always hear people, oh, it's only passive. It's not really going to help me offset anything. What do you have to say about that?
Charina, that's one of the things that drives me incredibly insane. You have to understand about two concepts primarily. And we're going to go into this in our next episode. But number one is the time value of money. Your dollar is worth more today than it will be tomorrow. So why in the world would we be telling our clients to forego a tax incentive? Because with that money, obviously, you can do more with it today, plus you allow it to compound over time. Number two is opportunity cost. Why would I want to pay the IRS anything when I stand to gain something, no matter what's going to be? So even if you have your rent for the year, the losses that are generated from cost segregation can help offset that for that year and maybe several more years in the future. So when you look at all those kind of things, it seems kind of silly that anybody would consult their clients and tell them to forego such an opportunity when it's available.
I love that. I love that. So I am so grateful that we were able to cover these tax strategies and create a framework for you to learn more about the benefits that are available and how you can make smart decisions for your financial future. Now let's wrap up this segment with a little tax trivia challenge. Which US state earned the nickname of cow flatulence tax due to their environmental legislations?
The answer is California, and that's because they wanted to help fight greenhouse emissions, particularly methane. So basically, what they've done is they incentivize farmers to invest in methane reduction systems and technologies in exchange for a tax credit.
I love that, Jose. And I really enjoyed this segment working with you. You're always so open to
And I
sharing
wasn't gassing
your
you up, by the
knowledge.
way. I wasn't gassing you up with that one. That's true. Yeah.
Thank you so much. It's always so much fun when you're working with people that are knowledgeable and that are willing to share. So follow us for more.